Welcome everyone to the Realty Debate on India's top cities. Each week, starting today, we will bring you the key highlights of top cities of the country and get a perspective on its real estate from all stakeholders, developers, consultants and brokers. At what pace are developers launching new projects? Which are the best performing micro markets? How are sales doing? How are prices moving? And how will they counter a general gloom-doom scenario staring at us? Let's begin with the south of the Vindhyas, Bengaluru and Chennai. Today and top of the debate, we'll take Bengaluru with our panel, Sushil Mantri, CMD Mantri Developers, C. Prabhakar, Director Gopalan Enterprises, Gulam Zia, Executive Director Knight Frank, Sachin Nigam, Senior Director Crisil Real Estate Star Ratings, and Sameer Jasuja, Founder and CEO of Prop Equity. Gentlemen, thank you very much for joining us today. I'm actually going to read out this very interesting data which both Knight Frank report and the Prop Equity report support, that this has been the city with the largest increase or percentage increase in new launches. You've seen first half of the current calendar year seeing a jump of 50% in new launches, and the good news is the demand is also extremely robust. It has kept up and the city has registered a strong new launch absorption figure of 93%. Mr. Mantri, what's going on in Bengaluru? There seems to be an insatiable appetite for real estate in your city.
No, I think the credit goes to the maturity of developers, because if you see the prices in Bangalore, they are quite affordable. You take a comparison, I would say, like in Bangalore, say Hebbal market is about 6,000 to 7,000 rupees square feet is apartment price, and if you compare Gurgaon in Delhi, it's about 12 to 13,000. The affordability, I think, in Bangalore is fairly well, because builders have kept the prices under control. And that is the reason I think the demand is still robust, and I hope the same will continue from all the sides.
Okay, you mentioned a really interesting point. You said builders have kept the prices sane, and I think that's borne out very well, Sameer, from the data that we have in front of us. Of course, we'll get to the micro markets. Sushil Mantri mentioned Hebbal. It's been one of the biggest performers in terms of price appreciation and also new launches. Overall, 10%, that's the average that Bangalore is looking at, a good steady sort of a market?
Yeah, I would agree with you, because I think Bangalore, first of all, is an end users market, and very little investment kind of investor class is there as such, although I can definitely feel that there's a huge investment class that got originated in Bangalore over the last 3-4 years, especially with respect to developments that were being sold near the airport area. And Hebbal and Yelahanka, classic examples of that, where prices have run away also because of a lot of investment going there from investors other than end users. But rightfully so, I would say, because of the main reason is that a large amount of employment generation is happening over there, thanks to, say, the Manyata Tech Park. Also, the airport has got, the city's got extended, and that's the most emerging real estate destination of Bangalore, closer to the city and close to the airport. So whenever a micro market or a region like that emerges, it does see a lot of action, sees price appreciation, and I think all the eyes are set in those two regions compared to the other parts of Bangalore.
All right, so we'll come to the micro markets a little bit later. Overview, Mr. Gopalan. Sushil Mantri says the reason is that, developers have kept a certain quality and prices haven't gone up so much. Prices have been rather sane, and that's perhaps the reason why Bangalore continues to exhibit such robustness. Is that correct?
Yeah, Manisha. In fact, Bangalore has been the best performing markets in the country, by and large, because we have been consistently delivering projects, completing the projects on time. There is as a possession guarantee which the builders are able to provide now. But more so, there is a balance development in residential, commercial, SEZ and retail which is going on, as well as social infrastructure, which has built a good macro climate for investment as well as for living. That has really helped the city have a steady growth in the past few years.
All right. Sachin, what do you feel? The one big point that we've also discussed on this show, now NCR, almost every day we look and it just doesn't happen. Bengaluru, Mr. Gopalan says, is very good on delivery. Do you think that the 3 years parameter where, the comfort that the buyer has, he will get his flat in 3.5 years is a big driving factor for buyers?
Yeah, it certainly is, because that's one of the things that the buyer looks, because it also depends as to what kind of market it is. Now in Bangalore, as somebody mentioned, is a end user driven market at this point of time. And for an end user, the delivery and the possession of his flat is a very, very important aspect in his decision making. And when he sees that comfort coming through in terms of getting the projects, possessions of them, then that obviously leads to a good feel-good factor through the market.
We keep reiterating the point, Ghulam, that Bengaluru is a end user market, but more and more I'm beginning to see that there is an investor class also emerging in Bengaluru. It's really not just, when you say end user, yes, it might be an IT professional who owns a home and would like to invest in one home. It may not be the way flats are sold in North India, through intermediaries, through brokers, large commitments, channel partners, but would it be that easy to define Bengaluru as a completely end user market?
Well, to begin with, let's look at the consumer profiling. As we spoke about, it's essentially driven by the demand coming out of ITS industry. And this is one industry which is very, very professionally driven, and hence the kind of people who are the end users, the buyers of the property are essentially end users and professionals who want a certain way of how the whole transaction is handled. What I'm trying to do is to differentiate the market of Bangalore with, say, an NCR or the rest of the country, where the buyers are of different types. I'm talking about industries coming from, say, for that matter, say manufacturing as one sector, or say NCR would be driven hugely by the policymakers, the administrators, etc., who are the big chunk of buyers. Unlike all that, here is one sector which is more of professionals, and hence the transactions reflect that aspect of that. And second thing is, look at the size of the market. It is not hugely overboard. Like for example, in Bangalore, you still look at about 30,000 housing unit sales per year, vis-a-vis Delhi, which boasts of close to 100,000 units in a year, which also gives a very wide range of buyers once again. And one more point, and the culmination of my dialogue or of my argument, is that this is one city which in last couple of years has done a lot on improvements on its infrastructure. How it helps is that the land values have remained under check. So going from one point to the other, if there is a good road network available to you, the land values will obviously be compared from one corner of the city to the other, which will have the whole land, which is a major input into construction of real estate, under check, which also obviously reflects into the price of the product. And if the price of the product has remained, say, about 150 or 200 basis point upwards of your inflation rate, then it is not one market which is very, very punter driven or very high risk driven market. It's a very stable market. So ultimately, the only point I'm trying to drive across is perhaps Bangalore is the most matured market of India, and hence the prices have remained under check, and hence investors don't find that they can't make a killing in a day and try to pull out the next. And hence it has remained a very, very secure market for end users, and by the investors have kept away from this market all this while.
All right, so mature markets, same markets, some of the terminologies which definitely describe or give Bengaluru a heads up on any other top city of the country. I'm sure there are some rough spots there. I mean, I'll come to the infrastructure a little bit later, but you go ahead, Sameer.
Yeah, I'd like to make a few more important points. One thing that we haven't discussed is the highest amount of FSI is also in Bangalore. That's why the land prices are in check. So typically you can get absolutely, you can get 3.5 to 4 FSI without a problem over there. You can do a condo project in 3 to 5 acres very easily, compared to a Mumbai or an NCR region where you need minimum of 11 acres, or Mumbai, for example, you just don't have the land, and your FSI is only 1.75 or 1.5, and you really have to get FSI through TDI in Mumbai, for example. So it's very difficult. So that's an important point.
That's a very critical point.
And the second most important point is that IT industry is probably the only industry that hasn't got badly affected because of this economy, and the dollar has been strengthening. So because of these two factors also, Bangalore sales are witnessing, compared to Mumbai or NCR, much higher absorption.
Mr. Mantri, run me through the infrastructure bit. I mean, Sameer's pointed out a couple of very interesting facts here, FSI, etc. But run me through infrastructure. I would say that, yes, there are, good initiatives on the infrastructure development, but still the city's infrastructure isn't really keeping pace with what the real estate sector would consider ideal. In fact, it's far from it.
No, I think what we are really missing in Bangalore is the infrastructure planning, because the metro railway work is going in full speed, but the total metro, unless the entire connectivity get established, people will not stop using the car and use totally metro, because today it is hardly 7-8 kilometer running, and it is likely that by December it will run about 10 more kilometer, but that's not a continuous, so that the people have to bring the car. But I think now we got a single government with a majority, and we are expecting, because first time it has happened, center and state the same government is there. We are expecting a good infrastructure push now the government will put, because Bangalore is really lacking for the infrastructure. And if the infrastructure is made up to like a Hyderabad standard, I personally feel things will be totally different in Bangalore, because today commuting is a real challenge.
Absolutely. In fact, Mr. Gopalan, give me your views on infrastructure. There are lots of things happening. Road widening from Hebbal to the international airport, metro rail we've just spoken about. There's North-South Connect, Nagasandra with Putanhalli. There's just, we'll keep flashing all those initiatives as we have this discussion, including the high-speed rail link. But, when I speak to a low-cost housing company which is looking at low-cost housing like value budget housing, they still have such issues regarding connectivity and say, how do we ever give affordable homes considering that land is available cheap only at the outskirts and connectivity isn't there?
See, like any developing city, the growth here is far more than the development of infrastructure, And also now you see being a stable government coming into city, we hope a lot more development we can foresee. But what I feel the potential here among Bangalore developers is, we have taken the role of a city planner, because see, when large projects are being planned, so there is a thought put into the community development, which is initiated by the government here, state government. So that I feel will really help in this infrastructure coming up, as well as the developers' role in developing the infrastructure. But you see, today our developers here in Bangalore have been quite innovative and coming out with projects like walk to work kind of a projects, which are all township projects with 60-70 acres of land, where you have residential, commercial, retail and school all in one big campus. Such kind of initiatives and innovative projects are coming up, which will, I feel, really help in the congestion in the city, the pollution in the city, and also help in being the productive time, being able to use as much as possible.
Fair enough. So lots of points emerging for Bangalore.
Yeah.
Even this, walk to work concept. Gulam, just give me a sense in terms of the key areas which Bengaluru is right now missing out on. Infrastructure seems to be still a gap, but do you think that the government, as Mr. Gopalan mentioned, a far more stable government with no disruptions could actually get that also on a high speed?
Well, as I said, infrastructure initiatives are already on the roll. And this, like if I pick up the point which my colleagues on the panel have been making, that it is happening in spite of two different governments at center and the state. So for once, if we have both same party managing both these forts, then I'm sure there'll be much more pressure, much more thrust on developing these infrastructure initiatives. So at least I don't see infrastructure as a missing link yet. If I compare the Bangalore of today with what I have seen, say, about a decade back or even half a decade back, people used to dread to go towards Electronic City or the old airport side, which today has changed drastically. In fact, Electronic City is a new emerging location because of improved infrastructure, because of improved connectivity and so on. The gap, however, I would nonetheless focus on is availability of cheaper land. What we're talking about is still something which can give you land inputs for doing a product of about 3,500 rupees a square feet, which is kind of an average price across Bengaluru. But then if I'm talking about doing something for say 2,000 rupees and under 2,000 rupees, an apartment for 10 lakh rupees or say 15 lakh of rupees, etc., that is still a tough task, and for which obviously you have to go towards farther ends of the city, and connectivity has to actually reach those areas. But having said that, we at times end up talking a lot about affordable housing without taking the whole context in mind. Like if I talk about the city where I come from, Mumbai, you have to look at the stark contrast here. On one end you have 100,000 rupees a square feet as a price. On the other side you're talking about catering to that 2,000 rupee market, which is once again the same affordable housing limit in Mumbai as well. And here the problem is much more enormous. So cities like Bangalore, etc., we still are talking about a price band of 3,500 rupees thereabout, which is not too bad from affordability perspective.
You're saying that Bengaluru hasn't become so unaffordable that we need to, harp about the affordable housing segment just yet, but then there is a big missing link. 10 to 15, 25 lakh homes are going missing as land prices are becoming expensive. And like we just told you, Bengaluru overall price appreciation has been 10% if you compare 2012 first half to the second half or the first half of 2013. We're going to be back in a moment. We're going to look at the micro market picture and tell you which, according to our panel, are some of the hottest markets in Bengaluru and what's going on in each of these markets. You're watching our real estate debate, which is city specific, getting you larger and broader perspective on some of India's top cities. And of course, the kickoff is with the city which is at the top of the pie, Bengaluru. Welcome back to our real estate debate on the big cities of India. Bengaluru is in focus, and if we look at the prop equity data, price appreciation as expected has been a decent and a modest 10% if you take an average of the budget housing, the mid and premium and the luxury housing. So that 10%, and of course 6 or 7 key micro markets. So you have to take that with a lot of disclaimers. So we are going to now just drill down these numbers and look at some of the key micro markets. Northeast, Whitefield, Hebbal, Northwest, Yelahanka, you have Southeast, Electronic City in Hosur Road, ORR and Marthahalli, and the Southwest, Bannerghatta Road. The numbers will come on your screen, but if I look at just the change, it's clearly been Hebbal, 34% increase, followed by Yelahanka, 17%. Sameer Jasuja, I was very surprised to see this data. And Whitefield, of course, is a far more modest number. One would think everybody wants to buy in Whitefield. That's not the case. Yeah. I think it's a very price sensitive market. If Hebbal and Yelahanka are cheaper, offer you better quality or equivalent quality, people are willing to also look at those markets.
So first of all, you have to compare a Whitefield and Hebbal and Yelahanka to a market like the golf course extension or Dwarka Expressway in NCR region, or in, for example, if you're looking at Navi Mumbai, you have to look at the Kharghar area and all that. These are emerging micro markets where the good part is that employment generation has happened. So that's why maximum number of new launches are happening, maximum amount of absorption is happening, and developers are raising the bar by launching one luxury project after the other and taking the primary prices up. So I would say that yes, you have to take these appreciation figures with a little bit of pinch of salt, because if you were to go out in the market to resell your unit, you may not witness this kind of appreciation.
So Bengaluru as a market also has now a gap between new launches and resale prices?
Absolutely. I would say in certain micro markets, and only those micro markets with respect to the ones that are close to the airport area, where there's a lot of investment that went in over the last 3-4 years and a lot of appreciation happened. And then this market, this is becoming the central-most market or the most emerging market over the next 5 years. This will be probably one of the best markets to stay in. Whereas Whitefield has been an established market for the last 10 years. So not much action happening over there. It's already a secondary market, I would say. So if you see overall Bangalore appreciation 10% is because secondary markets over there are end user markets. They're linked to inflation. There's not too much happening over there, and the prices are being driven by new markets which are offering better potential.
Sushil Mantri, would you agree with that? I also see a JLL report which identifies Whitefield as one of the hotspots of future real estate markets to invest or buy into. What would you have to say in terms of key micro markets, which are the ones that one should keep a close eye on?
No, I personally feel Whitefield is definitely an old established market, but if you see all the where IT companies are there, more the growth we are observing. Now if you take it as South Bangalore or Whitefield, and because of now the ring road, nice ring road taken place, Electronic City has become very convenient for Kanakpura road. That is also growing in a big segment because the metro connectivity is getting established there. So I would say in Bangalore about 4 or 5 packets are there where the demand is definitely very good, because looking to the possibility of the IT companies as well as the metro connectivity or highway connectivity.
So you're laying your bets on Southeast. We're talking about Electronic City. You said Hosur, ORR and Marthahalli. Would that be your pick, Mr. Mantri?
Yeah, absolutely right.
Mr. Gopalan, what do you think? I mean, if you were to look at some of the markets, I'm just looking at, of course, this is crunch data of first half of 2012 vis-a-vis first half of 2013. Yelahanka and Hebbal seem to emerge both the biggest markets in terms of new launches, also in terms of price appreciation.
See, Manisha, Whitefield primarily focuses on the mid-market segment, catering more to IT employees, ITS employees buying houses in and around that area, which is a very large segment. Whereas Yelahanka and Hebbal Junction have some signature properties, so it is catering to a very high-end segment by and large. But I feel as an investment-wise, there is a lot of future in investment in Whitefield, because Whitefield, though it is a self-contained sector, there is a possibility of growth towards Old Madras Road as well. So there is an extension of Whitefield, you see it coming towards Old Madras Road, where big, large new projects are coming up. Also the rental income, when you see in Whitefield area, coming from ITS companies, have been fairly good. So that I feel is a very stable market. Whereas Yelahanka and Hebbal also is more for signature building, people who are looking at larger prime properties in the city. An extension of Sadashiv Nagar in that area is what my take on this market.
Sachin, what's your take? Would you agree that Whitefield still cannot be dismissed? It's a market that you need to keep a close eye on. Amongst all the markets that we are speaking about, where would you put your money?
Well, I think to answer your question, I think you can't write off Whitefield, and it's an extremely well-established market. It has the infrastructure all around it. There is a clear woe of office spaces all close by and everything. So it's got a lot of things going on for it. And I think my personal view is that you can't compare Hebbal Junction or Yelahanka with Whitefield, because they are at different stages of life cycle, if I may use that word. These ones are the ones which are emerging, whereas Whitefield is already established. So it obviously caters to different segments as well. And at the end of it, any micro market for that matter will grow on account of economic activities in and around. And that would also mean connectivity and various other things. And that, in that sense, Whitefield is very well established, and so are Yelahanka and Hebbal in terms of the various new initiatives that are being taken for those markets.
All right, so I'm sure that neither Mr. Mantri nor Mr. Gopalan would have anything negative to say about the cities that they are in, but I'm going to toss this question to you, Gulam. Looking at the economic scenario around, do you think that Bengaluru can come out a little less scathed?
I'm sorry, if I can get that question again, less
damaged in terms of, slowdown, staring at a slowdown. Do you think that they would be able to ride it out the best amongst all cities?
Well, I would go by that. The simple reason is, as somebody mentioned on the panel discussion today itself, is that essentially the driver is ITES, and that's one industry which isn't really doing bad, and going forward as well, also getting the benefit of the depreciation of rupee, etc. It's one city which will continue to be in the driver stage for ITES, and that will have an impact on real estate. And at least going forward, I don't see this city to, concern much. And then I heard your question well. You were talking about, all of them are talking positive. If you're looking up to me for a negative, I'm sorry, even I don't have one. This is one city which has pretty much all of it going its way.
Sameer, then the question comes to you. Is this city going to ride out a big slowdown? I mean, we've already said that there are cities which are showing all signs of slowness. If I look at the inventory overhang figures, in most of the markets, even Hebel, which is doing very well, inventory overhang figures 23 months, and this was not the case a year ago when we were looking at this data. So sales have slowed down.
Yes, absolutely right. In the luxury segment especially, sales have slowed down. I was just talking to a few developers before this, and they were saying that if they were selling 10 units a month from Jan to March, that has come down to about 5 units from April to September. Things are looking up again, but if you were to look at the last 6 months, sales have come down by 40 to 50% in the luxury segment.
Sachin, what's your view?
Well, I think there are some segments which are surely seeing a slowdown, luxury segment being one. But at the lower end of the spectrum, I think the sales are still fairly decent, is what I take would be.
Are you saying flats below 50 lakhs? What's the pricing point?
I would say in the range of 25 to 40 lakhs, you're still seeing, fairly decent demand. And just to take off from what Zia was saying, Bangalore, what goes for Bangalore is the fact that it has got fairly very well balanced demographic landscape, so to speak, when it comes to employment opportunities. So it's IT, yes, but it is also, there are some very large public sector undertakings which are there. There are about 100 of the top 500 Fortune 500 companies which are there. So it has got a very, very good mix of companies around. Also the fact that it is also a very big educational hub and has got several things going for it would always mean that there will always be a migration to Bangalore from the rest of the places in terms of highly skilled workforce and even at lower end as well, which would keep the demand going for the city.
Fair enough. Sushil Mantri, are you building in for slower sales? Are you thinking, rethinking and, in terms of how quickly you should be launching projects? Is there a sense of caution which is now gripping Bangalore developers or not yet?
No, I don't think so, because the prices are fairly in control, and I think the 10% rise which someone expected, I think that is like a inflation. So frankly speaking, I think it's a cost of replacement, I would say. And I feel the same trend looks like should continue further.
All right, Mr. Gopalan, what's your take in terms of a real slowdown? Because, if you look at the rupee, if you look at the GDP numbers, if you look at the stock markets, you look all around you, there is this sense that, when people are more worried about their job security, they tend to stay away from large high-ticket purchases, and housing is definitely one of them. You could also see a reversal in terms of the interest rate cycle.
Yeah, but considering all these factors, external factors, I feel because most of the houses are bought by end users and the market is very much strong in the mid and the lower mid segment market. The affordability segment, the budget segment has just very nascent in Bangalore. So most of the big builders are also taking their their projects in those segments as well. I think for now the mid segment and the budget segment has got a very big has a very good demand in the city. And new emerging areas to look forward is Kanakpura Road and Mysore Road also are, there are a lot more possibilities of residential development in those areas.
Fair enough. I'm going to wrap out here with the Bengaluru panel. Mrs. Sushil Mantri and Mr. Gopalan, thank you gentlemen for being here. Of course, your city definitely bags the top spot in terms of market maturity and the offering to the end customer, and we hope to see that continuing in the future as well. Talking about Bengaluru, just a reminder that we do have a very, very unique web show lined up for you to see, feel, experience the top residential projects from 5 of the finest developers of Bengaluru city. The web show starts on 26th August. NDTV.com is where you need to log on to. We're going to be back with another market which is not too far behind in terms of the quality that they offer to the customer. That's Chennai. South always wins against the north and the west when it comes to just simple delivery. So we'll deep dive into the Chennai market, bring you of course the hottest markets there, micro markets, and tell you what's been going on in terms of delivery, launches and price appreciation. Welcome back. You're watching the Realty Debate. We're focusing on India's top cities. Bengaluru is something we've already discussed and of course announced as one of the most mature markets with sane price appreciation and definitely a market for end users. Let's move on to of course Chennai now. That's the other southern city which is in the spotlight. Chennai, if you look at the figures of the first half of 2012 and compare them to first half of 2013, hasn't been or even close to robustness that Bengaluru has seen. Why is that? We've got our panel, Suresh Krishna, MD Isha Homes, Ajit Kumar Chodia, MD Olympia Group. Gentlemen, thank you very much for joining in on this discussion. We also have with us Ravi Ahuja, Executive Director, Cushman and Wakefield, and of course Sachin Nigam and Sameer Jasuja continue on this panel as well. So I'm going to first read out some interesting data and then toss across to my panel. If you look at Chennai market, it's been fairly muted over first half of 2012 vis-a-vis first half of 2013. New launches have actually fallen by 8%. Demand for new supply has also taken a hit and stands around or actually has fallen by about 17%. So I'm going to come to you, Mr. Suresh Krishna. There seems to be a sudden despondency or things are not as robust as what we would have seen a year ago.
No, that's right, Lisa. Basically, because the supply, pent-up supply has come more this year. But the absorption ratio, if you look at it, it is, it's improving. And also the budget is very important. In which bracket we have this difficulty, we need to look at it. In the budget segment, we have still a lot of growth is there. So Chennai, the price have appreciated very well in the last 1 year. If you look at the price increase. So that is in some locality that is like that.
It's a fair point that, this tends to take everything from affordable to budget to premium to luxury and club it together. So that might not be the true picture. Ajit Kumar Chodia, this is also a market which, if as per National Housing Banking data, actually appreciated the maximum in 1 year. If you look at 2012 vis-a-vis 2011, Chennai was one of the better markets and gave very good returns to investors. Is it a case of having run away a little too ahead of what actually was on ground?
No, I don't agree. See, one of the reasons for the increase has been the high input cost. So if you look at the construction cost going up, so that has got impacted the price of the product. The land price has traditionally been very high in Chennai. So the reason for this increase in price, if you're looking, most of the apartments which were priced at about 3,000, 3,300 brackets are now going at 4,000 to 4,500. As a percentage increase, if you see, yes, we would have had about 30% increase. But really speaking, between 2008, 2009 and 2010, the market was relatively flat. So whatever the appreciation which had not taken place in those 2 years, you would have seen the impact of the price increase coming in the year 2012.
Fair enough. So you said 11-12 was, it wasn't a case of prices running away too fast. It was actually a catch-up game that Chennai was playing. Ravi Ahuja, would you agree with that? Why are Chennai figures looking so muted for the first half of 2013?
Yeah, I think while it's partially correct that prices did run up and we've seen some good price growth in some of the Chennai markets. While I do agree with Mr. Choradia that input costs most certainly have gone up, and that's not the case only in Chennai, that's also all across India. I think the input costs do play a role of growth in pricing. I think eventually some of the pockets are seeing good sales in Chennai. The luxury segment particularly, I feel, is doing extremely well currently. There is going to be a slowdown for sure with 7 to 8, 9 crore ticket sizes on the luxury side. I think it's reaching a stage where affordability, at least on the luxury side, can become more challenging if it goes towards a 9, 10 crore ticket size. I think the mid segment and the upper segment, it continues to do pretty well. Some of the growth corridors like the IT corridor and others where we still see good demand for office space will spiral into residential demand eventually. I think it's a mixed bag. We're only very concerned about developers who promise but may not be able to deliver eventually.
Price growth in terms of neutrality or demand, I don't see as a big issue. Chennai population is growing. We're seeing good migration happen even now, thanks to a lot of other asset classes other than office or IT or ITES, which does well. Industrial, for example, brings in a lot of demand as well. And this all spirals into good social infrastructure and residential demand.
So you're saying that if you take away the luxury sector, things aren't at all disappointing or anything to worry about. But if I look at some of the data, Samir, it has been a below average show for Chennai markets. It's proprietary data which have given low returns of 6%. Again, qualifier that it is of course a bag full of segments, is affordable, mid and luxury. Inventory overhang figure of 25 months has breached the comfort zone that we have. And we have seen distinct slowness in sales on the corridors that we are talking about, like the old Mahabalipuram Road and GST.
Yeah, absolutely. And I think one of the biggest reasons for that also is that, there are about 1,01,000 units that are supposed to be delivered in these emerging markets in 2014 to 2016. So the market, the Chennai micro market actually saw a lot of new launches over the last
excess
3
of new
years
launches.
And those units got absorbed quite quickly. The market was doing well at that time, and now there is not that much appetite for more new launches, and that's why developers are not launching, because they're not being able to sell their past projects as such. So there's no point launching more projects when there's no demand for them, and this has probably led to Chennai slowing down, besides the fact that the overall economy has slowed down a lot. And I think even if you look at the IT segment in Chennai on the OMR road, which is the hub of IT, there were so many complexes that were lying vacant. There was just no demand. So I think also, if you were to look at the employability, Bangalore scored much higher over the last 1.5 years compared to Chennai. And that is what is being seen now in the real estate side, that the Chennai real estate has started to witness a sharp slowdown compared to the other segments.
6 months ago, Sachin, or maybe it was 8 or 9 months ago, when we did this entire discussion on Chennai versus Bengaluru, and we had even Purvankara CEO Jack choosing Chennai over Bengaluru's tables seem to have turned this time around. Why do you think that's happened? Is this just a case of excess supply, too much exuberance, and now there's some sanity returning to Chennai market?
I think yes, to some extent it is a case of excess supply. But having said that, look at it this way. I mean, I would say that if one has to look at it in a positive manner, Chennai will always going to be a very, very steady market. That's a positive as well. It is always going to be, it will not display a huge jack up in terms of appreciations or whatever. It will always be a good, steady market showing decent returns over a period of time, end user driven. So there are several things going on for Chennai as well, and I think, I wouldn't write it off, really, I think it's a temporary blip wherein there is obviously a case of oversupply in certain belts, catering to certain segments, and then there is obviously a cascading effect of the economic slowdown. But I think there are several things which are going for Chennai as well.
With a surname like mine, I would never write off that market. You can be rest assured of that, Sachin. But okay, let's look at JLL report, investment hotspots. They say southern suburbs, Chennai, which covers the major corridors along the Great Southern Trunk, that's GST Road. They also find that there's a lot of steam still left in old Mahabalipuram Road, that's OMR, and ECR, of course, has always been a market which has been a big fancy of everybody who's in Chennai. They want to and would like to own something on the seaside. I'm going to just toss across the question to the developers here and just find out in terms of this entire competitiveness which has come in the market, Mr. Suresh Krishna. You're not only, local developers who are fighting for the pie in Chennai, you also have large national developers who've taken a fancy to Chennai. So is it a case of a bit of an oversupply which is going to ease off in, let's say, next 6 to 8 months?
No, I don't think so. It is not an oversupply at all. Basically, as you said, yes, national players have come because the market is good. Because in Chennai, it is always end user driven market. We don't see customers buying in 5 and 10s. They at the maximum buy 1. That's it. So this is definitely a market which is very stable, and because of that, a lot of national players have come in. And even though they have also come with a lot of big in number in some few projects, but there is a lot of demand in the sector where they have come in also. So I think this is that I don't see any oversupply in any sector as of now.
Fair enough. So Ravi, you said that. You said, look, if you are in the budget to premium segment, you shouldn't be facing any pressure in Chennai. But you said that the delivery capabilities right now are under pressure. What did you mean by that?
See, Manisha, the delivery pressure, I mean, 2-year projects may spiral into 3-4 years. There's a lot of activity there. Some of the developers have overcommitted. I think yet there are some reputed developers like Cbros, VGN and others, and some on this panel, of course, who are doing a good job. But eventually, some of the others have taken large parcels, and it is tough to contemplate that they may deliver these projects on time. That's one of the most primary concerns, I think, out there which the consumer has. And it is reflective of the pre-launch pricing, which is significantly less than the market pricing today. There is offtake of demand on the ready segment. The ready available apartments are selling at a price, but the pre-launches are stressed, and that's what I mean, because the consumer out there probably is thinking whether these projects will be delivered on time. Just digressing on the oversupply situation on the office side, for sure there is 6 to 7 million square feet all across Chennai, and probably the panel here was referring to residential oversupply and not being there, but in office, clearly, like Samir pointed out, OMR, Ambattur, they're seeing very high vacancy rates, but eventually when you see absorption, that spirals into residential demand eventually. So I think there is a blip. There is a sort of 6 to 12 months wait and watch on the heavy supply side. Chennai surely has not performed as well. It always used to perform almost 50% of Bengaluru in office segment. Bengaluru always saw 9-10 million square feet of absorption, and Chennai about 4.5. But for the first half of this year, we've seen a setback. We've seen 1 million square feet net absorption only. That only goes to show that the demand has significantly dropped. But I think the second half shows some good stead on the projections we have. Eventually, we cannot definitely ignore Chennai. It's a great market. It's a great industrial story, bound to continue. The Oragadam areas or Sri Perembedur locations are almost full. There's no new supply. The government is looking at acquiring land.
Some of the figures that he mentioned on office space absorptions clearly show that there are some fault lines in Chennai which one needs to worry about, which perhaps Bengaluru is going to ride out much more easier, staring at an economic slowdown. Would you agree with that?
Yeah, I would largely agree with that. I think the commercial space offtake is clearly a cause of concern right now in Chennai. And some of the figures are clearly bearing out that, and it's something that one has to be conscious of, and it's something that is obviously cascading into the residential one as well. So it's something which is very, very crucial for us to be aware of.
All right. Suresh Krishna, do you think that this entire figure that we see on office space absorption is a cause of worry? Is it something that is causing developers in the residential space also worry?
No, residential, definitely not. We have any problem in the residential area. In fact, there is not many vacant, flats constructed and waiting for buyers. It's not there. If you look at the entire Chennai market, hardly a few thousand will be there. That's all. So, as far as residential concerned, we are very much very in comfortable zone. Of course, supply is there, there are absorption also there, and price bracket is a key. I think which bracket we are bringing the project is the key in the future.
What bracket do you think is safe? Do you think that 25 to 60 is safe, 25 to 90 is safe? What is safe?
25 to 50 is a safe bet now.
Ajit Kumar Chaurya, there are not too many projects now if I go to Chennai which are below 40 lakhs.
Yeah, I think you're right. There are very few projects which are below 40 lakhs. I am of the view that as long as the project is priced, the apartments are priced somewhere between 25 to 100 lakhs, and the micro market is good. To that extent, the absorption is there. We are definitely facing problem in the, if an luxury apartment or a luxury project is there on the suburbs of the city, they are facing problem. But if it is in the bracket of 25 lakh to 70, 80 lakhs, up to 90 lakhs, I feel the projects are doing pretty well. Like Suresh said, there are hardly any vacant. If you look at, if we go to Gurgaon and other places, you would have a lot of buildings which are ready. The apartments are lying vacant. But here, even if you go in the night, you would find the apartments would be large apartment, large development, other the lights are on. The apartments are fully occupied. So we don't have finished apartment stock available like the office buildings which are there. Office building, like what Sachin had mentioned, like you had the IT buildings in the distant part of the OMR and the Ambattur, they have been lying vacant for 3 years and 4 years, and I don't think at least even in the next 1 or 2 years those buildings could be occupied.
Okay, so what Ajit is mentioning is that there seems to be a little bit of disconnect. Residential still seems to be holding on pretty well, even though the commercial and office space is looking so bleak.
If you look at a city like Chennai, it's a tier 1 city. You're looking at new launches of 11,000 units in the first half of the whole year. This city used to sell 40 to 50,000 units a year. So it's all relative, you know.
It's all relative.
Holding
Absolutely.
on is done phenomenally well over the last 3 years in terms of absorption. Now it's slowdown is staring at our face everywhere. We must admit that Chennai is also going through a slowdown.
Going through a slowdown, but developers seem to be fairly aware of this, and the new launches have gone down.
Yes, and when we talk about affordable, there is affordable demand everywhere in the country. If you come out of the home which is 20 lakhs to 40 lakhs in any tier 1 city, it's going to be sold.
It will be sold.
You
That's the point.
That hasn't got affected.
Idea is that it's not the 25 to 40 lakh, because most of the time it is 40 to 1.5, which is the sweet spot for mid-market, as we'll call it, depending on the city that you are in, probably going right up to 2 crores in Mumbai, some of the key markets. So that's the market we're looking at. Well, Chennai clearly seems to be a little more stressed out at this moment. Prices aren't coming down. Developers are selling. If the product is right, it's still getting sold. So that's the good news. But we'll have to see how the next 6 months pan out as the economy hits in a pocket, which it already has entered into. Gentlemen, Suresh Krishna, Ajit Kumar, Ravi, thanks very much. Sachin, pleasure to have your views. Samir, of course, data says it all, and some of the perspectives are quite clear. We're not writing off any market. We're just telling you the reality of what's going on. So clearly, Bengaluru seems to be able to defend itself better on the numbers that we see. Vis-a-vis Chennai, things could change. Again, as I said, 9 months ago, developers who were present in both Chennai and Bengaluru said we would bet on Chennai more than Bengaluru. 9 months later, the situation has turned around a little bit. So we don't know the future. We can't crystal gaze. We can just bring you the facts and the data to help you take the right decision with your investments. Thank you very much for joining me today. Goodbye.